in Sentimeter segment, we're focusing on United Spirits and the demand trends in the alco beverage industry. Mangalam caught up with Praveen Someshwar, MD and CEO of the company, and began by asking him about his strategy under his leadership and the immediate targets for the future. Listen in.
The way I look at it is, look, there are three key pillars as you build out businesses. And if I were to look at Diageo India, equally exciting. One is, how do you future shape our portfolio so that we can win come what may, given with the consumer? That's number one. Number two is, how do you embed Diageo in society and therefore win with society at large versus winning only as Diageo? And three, how do you create an organization of the future and constantly look at it? India will be the consumer market of the next decade, as I see it, okay? It's got its ducks in a row. In spite of everything going around the world, look at the demographic of the country. Look at how the middle is growing. Look at GDP growth. And that's a great place to be running a business. That's my first. Second, look at Diageo's portfolio within the country. Powerful portfolio, 3,000 crore brands, 500 crore brands, 400 crore brands. Wow, you know, 7 1 million case brands. This is of scale. And finally, is about innovation. Okay, how we are embedding innovation within the organization. You can see us investing in our R&D, investing in talent around it. So it gives me, a clear, opportunity for us to unlock the future portfolio.
5 years from now, you're saying double-digit growth that comes by. I suppose 64 million cases is what you did last year. If you go double-digit over the next 5 years, you're not too far away from over 100 million cases. Would that be a goal? And your margins, obviously you spoke about high teens having been achieved. Large part of that is also capped because of the 10% BIO margins. So I suppose around high teens, maybe touching 20, 21%. Would that be a goal for you?
The way I look at it is, I think premiumization is real in India.
So then do you look at volume growth or do you look at revenue growth?
I constantly look at value because the way I look at it is consumer in occasions. How do I get a share of the occasion? And how do you grow that share of that occasion? And that occasion share, I would love to see volumes and therefore consistently grow. But more importantly, how do I keep premiumizing and look at value? So I would look at value growth constantly. That's been my yardstick in whichever business I have been.
Got that.
So I am looking at double-digit revenue growth, absolutely. And yes, as we grow margins ahead of revenue, you will see that inching upwards. I'm not going to say is 20 good or 21 good or 19 good, but what I'm very, very clear is double-digit revenue growth in our P&A segment so that we are consistently winning and our margins improving further than that. And that's going to become, we are already roughly $1.5 billion in terms of revenue at a double-digit growth CAGR in 5 years. That's an exciting proposition.
There could be some speed bumps along the way. The speed bumps would obviously be from the regulatory environment. And let's go state by state and let's do this as rapid fire as we can. Maharashtra, 30 to 40% price increases. How do you deal with something like that? And what's your plan here?
India is 25 different markets. In each of these states, the framework is a little different. And we've seen over a 3 to 5 year cycle, each of this state goes through some exciting tailwinds and some headwinds. Right now, yes, Maharashtra, we've seen some regulatory action, which has resulted in roughly a 30 to 35% increase in price. Our duties have gone from 300% to 450%. But look, this is a reality. It's been roughly to today, what was the date? Yeah, roughly around 70 days from the new regulation. And we've seen 40 days of the new pricing in the marketplace. We've seen consumer spend grow by mid-teens to high teens. What it tells you is that, look, we took a 30 to 35% increase. our brands are strong enough for consumers to start up pricing and up paying up. To be revenue neutral or volume neutral, you need to grow consumer spend by 30 to 35%. We're still some distance away. But in the normal course, mid-teens to high teens is an exciting space. I would take that any day. So it tells me that, look, in terms of we seeing growth, we're not seeing translation into volume growth as yet. But every day ahead, I see this improving. And I see in the next 6 months, people from Maharashtra wanting to start to trade up.
You know, it's become a de facto thing now post the recent successes in some of the state elections, populist policies, many schemes that give a lot of cash to the citizens of that state in particular, and then you fund that through taxation on alcohol. Do you think this trend is likely to sustain, and as a result of which alcohol becomes the whipping boy once again?
Look, alcohol bev business is such a fun business. It's indulgences. And if you look at a country like India, indulgences will always be seen with a certain lens. We need to appreciate that, okay? Once we appreciate that, you embrace it. Once you embrace it, you start, therefore, building a portfolio of products, and therefore, which unlock each of the occasions. I don't see it as a negative. I see it as reality of India, and therefore, I just work with that in mind.
I ask this from an investor's lens right now. If you're looking at the entire alco-bev sector, you had a couple of listings in the recent past, people who've raised money from the markets, etc. They've been showing good growth. There has been a big deal as well. Imperial Blue was bought over by Tilaknagar Industries. So obviously there is that tailwind coming in for that stock. If you look at some of the other wine players, they are looking at some of the assets which are there outside of wine in the brown space, which is 85% of the category. And then I look at Diageo. Yes, it's the market leader. Yes, it's got the largest share in that space. Yes, it's got the highest margins. But at the same time, it's also got the highest PE multiple. So for you to justify that PE multiple, you obviously have to grow faster than the market on that high base with margins which are already at higher than everyone else in the industry. How do you continue to hold that edge?
So, the way I look at it is, are you growing the category? Is the category in momentum? The great news is, yes, we are growing the category is in momentum. Within that, do you have the portfolio to unlock the category space? Yes, we do have the portfolio. Are we now getting higher share of the occasions where our consumers are? Yes, we are consistently starting to get higher shares of our. Are we innovating to build the portfolio of the future? Yes, we are. If each of these are in play, then the virtuous flywheel is in play. So we are in a good place. We feel absolutely excited, and we believe the double-digit growth, which we will see, keeps us ahead of the pack on a sustained basis. There will be quarters when someone else will grow faster or we may grow a little slower. But in a reasonable period of time, you will see that we are consistently delivering above market.
So consistency over excitement is what you would bet on?
Consistency is any day something I would sign up for.
Okay, well, that's the management of United Spirits in conversation with my colleague Mangalam Malu. Interesting one. Vinay